So if you are 60 or older, retired, getting ready to retire, receiving Social Security, enrolled in Medicare, or living on a fixed retirement income, stay with me. Because today, I want to walk you through the major September changes and deadlines you need to know about, what they could mean for your money, and what you should do before the month gets away from you. And there is one letter in particular that I want you to watch for. A lot of people receive this letter, open it, see several pages of numbers and insurance language, and put it right back in the envelope. That could be a mistake. Starting in September, Medicare Advantage and Part D plan members should receive an important document called the Annual Notice of Change, or ANOC. This notice explains changes your plan expects to make for the following year. That can include changes to premiums, cost sharing, covered services, drug coverage, provider networks, and other plan terms. Medicare itself tells beneficiaries to review this notice because the changes take effect in January. And this is where September becomes important. You are getting information about next year's coverage before the Medicare open enrollment period begins on October 15th. Think about that for a moment. You have a window of time to look at what is changing before you have to make an enrollment decision. So when your ANOC arrives, do not just file it away. Sit down with it. Look at your medications. Look at your doctors. Look at your monthly premium. Look at your deductible and other costs. And pay attention to any benefits you actually use. Maybe your plan has dental coverage. Maybe it has vision benefits. Maybe it has an OTC allowance. Maybe there are transportation benefits or other supplemental services. The question is not whether the plan was good for you this year. The question is whether it will still be a good deal for you next year. That is a completely different question. And if you discover that something important is changing, September gives you time to investigate your options before the October enrollment period arrives. You can also contact your State Health Insurance Assistance Program, commonly called SHIP, for free personalized Medicare counseling. You do not have to wait until the last minute. In fact, waiting until the last few days of enrollment can make this process much more stressful. Now, there is another reason September matters. It is connected to something millions of Social Security recipients are already watching closely: the 2027 Social Security Cost of Living Adjustment. You may have already seen headlines predicting a specific COLA percentage. Maybe you saw 3%. Maybe you saw 3.5%. Maybe you saw an even higher number. But remember this: those are projections. They are not the official 2027 COLA. The official adjustment is calculated using the CPIW inflation measure for the third quarter, specifically July, August, and September. That means September is the final month of the measurement period. The September inflation data will be released later, and Social Security will then calculate the official COLA. So when you hear someone say, "Your Social Security check is definitely going up by this exact amount," be careful. Until the official calculation is released, it is still an estimate. But you can understand why September matters. The inflation data being measured during this period becomes part of the formula used to determine next year's increase. And here is something else retirees need to think about. A larger Social Security check is obviously good news, but a higher benefit can sometimes create other financial consequences. For example, some retirees may see more of their Social Security become taxable depending on their overall income. The federal tax rules use what is commonly called provisional income when determining whether Social Security benefits are taxable. And those thresholds have been around for decades without being indexed to inflation. So if your other income stays about the same, but your Social Security benefit increases, your tax situation can change. That does not mean everyone with a COLA increase will suddenly owe taxes. It means you should look at the entire picture. And there is another tax change seniors should know about in 2026. The new enhanced senior deduction can provide an additional deduction of up to $6,000 for an eligible individual age 65 or older. For a married couple filing jointly where both spouses qualify, that can be up to $12,000. But there are income phase-outs, so not everyone will receive the full amount. The IRS says this enhanced senior deduction applies for tax years 2025 through 2028. So if you are planning your 2026 income, do not assume the deduction automatically means you can ignore your tax situation. Use the actual numbers. Look at your Social Security. Look at pensions. Look at IRA withdrawals. Look at investment income. And if you are making estimated tax payments, make sure your payments still make sense. That brings us to another important September date, September 15th. For taxpayers who are required to make quarterly estimated tax payments, the third quarter estimated tax payment deadline is September 15th. This can matter to retirees who have income without enough tax withholding. That might include certain pension income, investment income, rental income, self-employment income, or taxable retirement withdrawals. If your income changed during the year, your estimated payments may need to change too. And this is especially important in a year when new tax deductions and rules are changing. The worst strategy is to simply assume that whatever you paid last year is automatically correct this year. It may be, but it may not. If you are unsure, check your withholding and estimated tax situation before September 15, instead of waiting until tax season to discover a problem. Now let's talk about another September issue that could put money back in your pocket. Your Medicare Advantage OTC benefit. This one depends completely on your specific plan. Some Medicare Advantage plans offer quarterly or periodic allowances for eligible over-the-counter products. If your plan gives you a third quarter allowance covering July, August, and September, you need to check your plan's rules before September 30. Why? Because unused benefits may have expiration rules. Some allowances may not roll over. Others may have different schedules. The exact rules depend on the plan. So don't assume. Look at your plan documents or call the member services number listed on your plan card. Ask one simple question. What is my remaining OTC benefit balance and when does it expire? That question could take less than 5 minutes to answer, and it could prevent you from leaving a benefit unused. Do not buy things you do not need just because you have an allowance. But if you already need eligible health and wellness products, check whether your remaining benefit can be used before the deadline. This is one of those small retirement money decisions that can add up over time. Now I want to clear up something very important about paper Social Security checks. You may see videos claiming that September 30th, 2026 is the final deadline for every Social Security recipient still receiving paper checks. That is not the way I would present it. The federal government announced the broad phase-out of paper checks beginning September 30th, 2025, not 2026. So if you are still receiving federal benefits by paper check in 2026, do not wait for another supposed deadline. You should contact the agency that handles your payment and find out what options are available to you. Electronic payments are generally handled through direct deposit or other approved electronic methods, and exceptions may exist for people who face genuine hardship or other special circumstances. The important message is simple. If you are still receiving a paper check, do not ignore it. Verify your payment status directly with the official government agency. Do not rely on a social media post. Do not rely on a YouTube comment. And never give your bank information to someone who randomly calls you claiming they need to update your Social Security. Go directly through official channels. Now let's move to something that can save some homeowners a surprising amount of money. Property taxes. If you own your home and you are a senior, you may qualify for a state, county, or local property tax reduction, exemption, freeze, or deferral. But there is an important catch. The rules are not the same everywhere. Some states have generous programs. Some counties have their own deadlines. Some programs have income limits. Some require you to apply every year, and some deadlines can fall in the late summer or fall. So instead of assuming that your state automatically gives you a senior property tax break, call your local assessor's office. Ask them 3 questions. What senior property tax programs are available? What are the eligibility requirements? And what is the application deadline for my property? That is it. You may discover that you qualify for a program you never knew existed. And if there is an application deadline approaching, you can deal with it before the window closes. This is especially important because property tax programs are local. A rule that applies to a senior in one state may not apply to someone living 2 counties away. So this is one area where you need to check your own local government rather than trusting a national headline. Now let's talk about Social Security disability and the Compassionate Allowances program. This is not a new retirement benefit for everyone. And it is not something every Social Security recipient needs to apply for. But if you or someone in your family has a severe medical condition and is applying for Social Security disability benefits, this program may be important. Social Security's Compassionate Allowances initiative is designed to quickly identify certain serious diseases and medical conditions that meet the agency's disability standards. SSA maintains an official list of qualifying conditions. The purpose is to speed up the disability determination process for people whose conditions are severe enough to qualify under the program. So if you or a family member is dealing with a serious diagnosis and has a pending or new disability claim, check the official Compassionate Allowances list at SSA.gov. Do not assume a condition qualifies simply because it is serious. Verify it against the official list. And if you believe the condition qualifies, make sure SSA is aware of the diagnosis and the relevant medical evidence. This is another situation where using the official government information is much safer than relying on a viral post promising instant approval. Now, let's put all of September together. First, watch for your Medicare annual notice of change. If you have Medicare Advantage or Part D coverage, review the document carefully. Look at your medications. Look at your doctors. Look at premiums and other costs. And look at the benefits you actually use. Second, remember that September is the final month in the third quarter inflation measurement period, used to calculate the next Social Security COLA. But do not treat online COLA predictions as official until Social Security announces the number. Third, if you have an OTC allowance through your Medicare Advantage plan, check your remaining balance and expiration rules before the end of the quarter. Fourth, if you are still receiving federal benefit payments by paper check, do not wait for another deadline or social media rumor. Verify your payment method directly with the appropriate government agency. Fifth, if you own a home, check your local senior property tax programs and deadlines. You could be leaving money on the table simply because you never applied. Sixth, if you make estimated tax payments, remember the September 15 quarterly deadline and review whether your payments still match your 2026 income. And seventh, if a serious medical condition is involved in a Social Security disability claim, check SSA's Compassionate Allowances program and official list. Now here is the biggest lesson I want you to take away. September is not about panicking. It is about checking. Check the letter. Check the deadline. Check your Medicare plan. Check your tax situation. Check your local property tax rules. And check your payment information. Because retirement mistakes are often not dramatic. They are small things that get ignored. A letter that stays unopened. A deadline that gets forgotten. A benefit that expires. A tax payment that was never adjusted. Or a program that you qualified for but never applied for. You do not need to understand every government rule in America. You just need to know which rules can affect you. And if you are watching this before September begins, that is actually good news. You have time. You can make a short checklist. You can gather your Medicare documents. You can review your current medications and doctors. You can check your tax payments. You can contact your local assessor. And you can make sure your Social Security payment information is up to date. Do those things before you need them, because the best time to solve a retirement problem is before it becomes an emergency. If this information helped you, make sure you subscribe to the channel because I will continue breaking down Social Security, Medicare, taxes, and retirement changes in plain English. And share this video with a parent, grandparent, friend, or anyone else who depends on Social Security or Medicare. September is coming. The goal is not to worry about every headline. The goal is to know what actually matters to you. And that simple difference can save you money, time, and a lot of stress. I will see you in the next video.